Welcome to Creamer Media's Resources Watch, a weekly video roundup of the events and people making and shaping the news in the mining industry. This week, Amplats moves headlong into market development and overhead stripping. Kumba Iron Ore gets cracking on expanding its just-built Kolomela mine, and a lack of updated geological information is partly to blame for the low levels of exploration in South Africa. Struggling Anglo-American platinum is going headlong into market development, geographic demand diversification and overhead stripping as it reels from a 264 million rand bloodbath loss in the first 6 months of 2012.
It's an industry which has come from times of plenty. So the conversation I have with my colleagues is it has a rich child syndrome, that the costs end up being higher because people say we can afford it. But this is an opportunity to, let's say, what can we reduce the overheads to what is sustainable? Because it's also good for the operations. Because before we cut a single job in the operations, we should not be having excess effort in the structure. The focus, before we look at the operations, the focus should be make sure that we are lean, mean and fit. We are having a brutal focus on our cost structure to make sure that it's reduced to the bare minimum, but which is sustainable.
Fast-growing Kumba Iron Ore has already got cracking on studies to expand Kolomela. Its just commissioned 9 million tonne project still in ramp-up phase.
We're still committed to produce 70 million tonnes in South Africa by 2019. Post-2013, we'll be looking to our potential projects in the Northern Cape and the Limpopo provinces, which are in different phases of study to take us to the 70 million tonne level. The Kolomela expansion project, which is anticipated to deliver a further 6 million tonnes from Kolomela by 2017, has progressed from a concept to a pre-feasibility stage.
The availability of updated geological information could significantly increase the amount of exploration taking place in South Africa.
Yeah, I think it's fairly complex, but one of the problems that we face is current legislation in South Africa, and I really do believe that the laws are actually very good, but there are inconsistent applications in the current legislation. There's also huge uncertainty of what to expect in future policies. We know what the debates are taking place at the moment, but that makes people quite wary to invest. And I do know that many companies work in other countries where nationalisation are possibilities, where there's various high risks, political high risks, but usually they know where they're going to and the environment in which they work. And uncertainty here really does affect people's views on whether they should invest or not.